Hi everyone, hope you're all doing well, and today I'm going to talk about a UK stock I've not talked about for quite a few months. I thought it was deserving of an update and just what's going on, and also this company has been on a very good run on the share price recently, so I thought I'd talk about that. So a little bit of an update into this stock, but as well as that, I feel like with what's going on with other stocks right now, this stock is a really good example of why patience is key. And there's two bits of little examples for investing, a bit of education I guess in the stock market, of why patience is key, and this is shown by this stock. So yeah, hopefully it's a little bit of a good update into this stock and what's going on with it and the share price action. And also, even if you're not interested in this stock, I hope the two little bits of information are useful. If you could hit the like button, that'd be absolutely amazing. If you do want to start investing, there's some links in the brokers in the description, and we'll take a look. So the UK stock we're going to talk about today is my third biggest UK holding. I've held this stock for coming up to 2 years now, so it's starting to come into a bit more of a mature investment for me, because obviously I invest for 2 to 5 years, so it's starting to get to my end of the scale, I guess, a little bit now. Not towards the end of 5 years, but to where I would expect the stock to start doing quite well, and it has done. I think I'm currently up just close to 70% on this one. So for me, that wanted to get about 100% return in 2 to 5 years, this is doing very well, and it's a stock that's now maturing to where I was hoping for it to go. I generally have no plans to sell this, because when I look at the plans in the future, I'm still very happy with what this company is doing. So yeah, Hollywood Bowl, what they do is they run bowling alleys, but as well as bowling alleys, they have expanded into putt starters, which is like a mini golf, and then they also have the arcades and the bars. So very diverse income stream. They've really managed to diverse it from just being a bowling alley to have all them sort of income streams, which is great, because you as an investor, what is the big thing that really does help your companies and your companies that you invest in and expand them revenues and profits is by expanding, and also expanding the income streams that come in and diversing that income and having that bit more of a moat. And that's what I really liked about Hollywood Bowl. It's one that I actually debated on coming my biggest position for such a long time. I did average up on it a while ago, but I was still very 50-50 about making my biggest position. Potentially I could have done, never did in the end, but still a fantastic company. It trades on the ticker symbol BOL, which is pretty funny, and it is just short of a 500 million market cap. Now, this stock has been on a crazy run. It is now starting to get to the point where it is near its pre-pandemic highs. So you can see here it was £3 pre-pandemic, and now it's starting to get towards that mark. It's the highest it has been for a very long time, and it is currently sitting at its 52 highs right now. Now, when you look back on the share price, to see that drop is absolutely bonkers when you look right now. I mean, back in November time, it was putting in 52 close. You know, in October 2020, it was putting in 52 close. So there was a good period of time where the stock didn't do anything, and then we had the shoot up, and then once again we consolidated. But recently, what has happened since we've turned into this year, the stock has gone on a crazy run. So since the 24th of December, you'll see here the stock is up. Well, it was up just above 26%. Had a little bit of a slight drop off, but still up 24% in 2 weeks, which is pretty good going. You know, this is the big thing, which I'm going to talk about in a little bit, just on an education point of view. This is why you can't predict what stocks do. You know, there's no telling you what the stocks are going to do next month. You know, this is why you can't be a short-term investor really in this game. You have to really plan long-term, because you don't know when them stocks are going to have that lift up, and you generally don't know when them stocks are going to have them periods of time where it flatlines and does nothing. This is a prime example of that. As long as you hold great companies, you will get the rewards for that. But going back onto Hollywood Bowl, absolutely fantastic company. If we look at the future growth and the past growth, let's go on the past growth to start with. You can see here this company has a history of just growing that revenue at a nice steady pace and increasing that profit. Now, obviously you have the CV dip, which is obviously a short-term thing, created a great buying opportunity. You know, if you're a short-term minded investor and you think, oh, you know, it might be a bit ugly over the next kind of 6-12 months, but if you're actually a true long-term investor, you would have looked at this opportunity and go, okay, yeah, it's going to suffer in the next 6-12 months, but what's going to happen in the long term? Long term starts going back to putting in decent amounts of revenue, decent amount of profit, and we've started to see that happen with this company right now. So that, from that point of view, it's a company that has a history and will carry on having really good revenue and profit growth, which is the main thing. Balance sheet wise, it's once again, you know, when you look into a company, you want to see a strong balance sheet. It has a very strong balance sheet. It's normally sat around a 30-ish debt to equity, 30% debt to equity ratio. Recently though, it has gone clean, which is obviously really impressive. And what you'd want to see as well, it has a little bit of a healthy cash balance sitting on that balance sheet. So you see here, it's got 29 million in cash, and for a company that's valued around 500 million, that's pretty good going as well. Dividend should start coming back on this one sometime soon. It hasn't at the moment. We'll see if they do plan to bring that back. But obviously as well, the great thing is that you're probably going to pick up a bit of a dividend stock with this one as well, which I've always thought in the long term. I'm probably going to have a company that has good growth and potentially a dividend as well. A little bit of a shout out on the ownership. Only a few months ago, this stock was getting a lot of criticism because insiders were selling out. And it's one of those that, you know, when insiders sell out, it's normally not too much of a thing to panic, because there's plenty of reasons why insiders will sell out of a company. Doesn't mean that it's a terrible company. And then what happened a few months later, a lot of insiders came in and bought, and a lot of insiders bought, and buying is more key than selling, because when insiders are buying, selling can be for many reasons. Buying is for one reason. Buying is because they think their company, their stock is massively undervalued. And you can see here, March time, there was a lot of insiders that came into this company. And after them insiders came into the company, there wasn't a point where, the stock price, if we go back here to, they came in at March time, right? So if we just go on a year chart. So they came in at March, right? What has the share price done after they came in? It was down 8%. So, even insiders can come in. It's a bullish sign, but don't expect sometimes insiders to start buying up and then all of a sudden, whoa, it's going to go absolutely crazy. But you appreciate they're buying that because they do think their stock is undervalued. And if you're a true long-term believer of that company, you should see that start to play out, which we have started to see recently. Now, the recent results for Hollywood Bowl were very good. The big thing to say here is that this, and a lot of UK stocks will have this. So you might have seen Card Factory yesterday. Card Factory had a bit of a drop. And the thing is their results were actually pretty impressive. And the thing is like a company like that, they haven't even got back to full opening for a full year yet. And the same for Hollywood Bowl. You look here, the estate for Hollywood Bowl was a complete closure for just over 50% of the financial year. That's the big thing. Like, a lot of these companies aren't still back at full capacity yet, which is the crazy thing to look at as well when you're looking at a few of these companies. And the earnings were really good. The revenue growth was very good. The amount of profit they're still doing is very good. And the great thing as well is, like, when you look into a company and you're trying to predict the future, you want to look at that company and go, okay, it's got good profit and revenue growth, but how is it going to continue that going forward? And this is the key in Hollywood Bowl. They've got new, they're refurbishing some of the locations that they have. They have 2 new Hollywood Bowl locations, including Resorts World and one in Birmingham. It's expanding into Puttstars, and you can see here there's 2 new Puttstars opening in financial year 2022, and they're on track to open a further 10 to 14 centres by the end of 2024. So you look at what's going to drive this company going forward. Tell me what is going to help this company do very well in the next 2-3 years. Well, here you go. It's refurbishing the locations, it's opening up new locations, it's adding a new income stream, and this is how they're going to carry on expanding going forward. So the path here of why you would invest in this company is very clear here, and overall very good, and probably due a bit of a run really, because it's a fantastic company. Now, going on to the 2 lessons to be learnt from this one, and the key of patience. And this applies now to so many stocks out there. You will see at the moment, there's quite a few stocks that are having a little bit of a struggling time at the moment. I think everyone is aware of that. And Hollywood Bowl is an example of why patience is so key, and you need to know why you're investing in that company. And if you have a great company, it will do well. So an example for this is Hollywood Bowl. Okay, through the period of when it had this CV dip, people would have sold out at a loss, and the people that sold out at a loss is because they sold out in fear. People sell out in fear. When people see a stock dropping, they'll panic and they'll sell. And there's people that would have sold all the way down here. Now, on the 13th of March, and this is the thing, you won't hear these people. These people are the investors that struggle in the stock market. These are the investors that don't do well in the stock market. 13th of March, at £1.82, there would have been investors that sold out of that. They panicked. They saw the stock fall off and they thought, oh, I'm going to sell out of this. Now, all they had to do was wait half a year and they would have been break even on that company. If they had waited just around about 1 year, they would have been up 25% on that company. And even now, if they waited 2 years, they would have been up 50% on the company. And that's the key of patience. These are the people, and you won't hear from them, that are emotional investors that reacted off a share price drop rather than looking at what they're doing and planning out what will happen and what will go forward. Have I got a great company? Will I be okay? And that's a prime example why you need to know your company. So that's the first point. None of the people that have got burnt from that will come and tell you that, okay? The next point is that there'll be periods of time, and this is why patience is key, your stock will do nothing. And potentially your stock goes down. There'll be some people here that bought the stock at £1.85 on the 5th of June. And generally everything was getting a bit more okay out there. People were getting okay with the situation that was going on at the time. Okay, it's, originally from where we were at March time, and there was a bit more panic and there wasn't really much understanding what was going on in the world. By June time, we started to get a very good idea what was going on, and it wasn't as, obviously it was still terrible, but it wasn't as bad as what we originally thought. And some people would have bought this stock at £1.85. Now, for no reason, and the company was starting to get back to operating, the world was starting to adjust to, okay, we might be okay here. And there would have been people here that through this period of time would have been down 17%, 27%, 29%, 30%, all the way down there, 30 at the peak over a course of a 3-month period. Some people would have bought this stock and would have gone down 30% in 3 months. Now, if you panic, if you don't know your company, you don't know why that company's going to do well, that might have made you worry slightly if you've done that. But if you understand what you bought and you know this is a great company and the profit and earnings will grow in it, very quickly what will happen is you might have looked a bit of an idiot being down 30% for 3 months, but look how quickly that changed. Within 1 year, you look, okay, that's not too bad now. And now within a year and a half, you're looking at that going, okay, I was down 30%. This is why you can't use stop losses. I was down 30%, but within a year and a half, I'm up, 52%. And that's the key of putting it in the long term. That's why you might look a bit of an idiot for 3 months. You might have gone down on that stock 30%, but look at that. Now you think, okay, I've held it. I'm a long-term investor. I'm up in a year and a half, I'm up 50%. And it's a great company. And because it's a great company, what will happen is one day you'll look back on this in 2 years, 2.5 years, and you go, oh, I'm up 70% now. 3 years, I'm up 100%. 4 years, I'm up 120%. That's the great thing. So that's what I want to say about that, is that patience is key. There's periods of time here through March to December. There would have been a 9-month period here where your stock has done nothing. In fact, your stock might have been even down after you bought it. A 9-month period where your stock does nothing. You got to be prepared for that. Doesn't mean it's a bad company. That share price had flatlined for 9 months. No rewards for it. But if you're a long-term investor, it's okay. I'm looking at the business is doing well, and it probably will have that again. But what will eventually happen, what happens with all great companies, is if they keep improving, if they keep doing well, that share price will follow. It will follow, guys. So I wanted to finish on that one anyway. So hope you enjoyed the video. Hope you enjoyed the little update on Hollywood Bowl, and hope you enjoyed some little lessons here from that Hollywood Bowl share price anyway, guys. Hope you enjoyed it. Hit the like button if you're new, subscribe, and I'll see you on the next video.